Hello and welcome to another episode of our From the Helm series, live here at Gather Round in Adelaide for Resources Rising Stars Conference in partnership with Bell Financial Group. I'm Grady Wulff, Market Analyst with Bell Direct, and a familiar face here, Marc Ducler, the Managing Director of Astra Resources. Marc, thanks for joining us again.
Yeah, thanks, Grady.
What's happened since I last saw you?
When was that? December last year.
Yeah.
So look, we put out a new mineral resource estimate. We've also launched an off-market takeover for Maximus that's just gone compulsory acquisition. So we've actually had a pretty hectic couple of months, to be honest.
Very busy.
Yeah.
Now, talk to me about the Mandela Gold Project. You updated the resources you just mentioned. Tell me about how significant this is.
The idea of significant, that's probably a bit of an overreach. Look, you need to do a number of de-risking steps as you advance towards the pre-feasibility. This latest resource update, we've now gone from 1.2 million ounces to 1.4 at Mandela, but importantly, Thea is now 1.2 million ounces, and that's the pit that makes all the money. It's one really big, large open pit. And importantly, we've also taken the resources up another notch in terms of we had another 49% increase in indicated, and we actually added 160,000 ounces. So it was a good update and one we needed to do for the pre-feas.
And definitely a good one in a time where the gold price is running hot. Now, talk to me about the Maximus deal. Obviously, that's very strategic and plays into your portfolio, the Astral portfolio moving forward. What's the significance of this deal and where does it play into your strategic outlook?
Well, it was, let's just say, a well-executed land grab, I think, would be the best way to think through it.
Yeah.
So that tenure literally abuts us. So it's on our western boundary. They have 120 odd square kilometres. We probably had 16 odd.
Yeah.
And if we did have a weakness, it was that we had a small tenement footprint, and we have now fixed that by that transaction. And importantly, before we even approached Maximus, we had a look at what a more optimum waste dump design would be if we could relax our infrastructure over that tenure. And you get charged based on horizontal run by a mining contractor and vertical run. So a rise and run when you're moving material.
Yeah.
And we looked at those rise and run rates and said, right, let's build a much better waste dump than what we had in the scoping study. And we saw a $30 million cost reduction. So we paid circa $30 million for the transaction. We'll save circa $30 million just by building a better waste dump. The ounces come for free. It's a great transaction.
That's a very, very strategic deal. Now, you don't just have one asset, you have multiple assets. Talk to me about the Fazeville project.
Well, the Fazeville project's important because by the time we get to pre-feas, at scoping, we had 7.5 years of mining, 10 years worth of processing. I think at pre-feas, it'll be closer to 15 years of mining and 20 years of processing. So the pre-feas is going to be a lot bigger.
Yeah.
But if we're going to add new ounces, we want to add ounces that are at a decent grade, because what I want to do is I want to go, rightio, year 3, we're feeding this Mandela material, but we're actually putting in a bit of low grade.
Yeah.
Let's leave that on the ROM and let's feed some high grade material from Fazeville. And that's what the exploration effort at Fazeville will yield us. I mean, Camperman's 84,000 ounces, it's 1.3, but the indicated component's 1.5 grams per tonne.
Yeah.
65 Ks from Mandela, easily truckable. Put it in year 3, displace some half-gram dirt from Mandela, it will make money.
Yeah, that's exciting and huge for what we're expecting from the company. Now, when will you complete the pre-feasibility study? Are you expecting, and how do you think it will stack up against the scoping study that you put out earlier this year?
So June quarter, so this quarter, I'm hoping we get it done by mid-June.
Yeah.
There's always more work in there than what you think.
Yeah.
And you get the document ready and then all of a sudden there's some compliance things you need to deal with. So it's complex, and especially when you're doing it with such a small team, everyone's got to pull their weight there.
Yeah.
So I would suggest we will be 50% more gold production at least. Operating costs will be flat.
Yeah.
Gold price will be up well over 50%. So it's a no-brainer that it's going to be a cracking study, and the financials are going to be really, really impressive.
And what are the other steps you have to take to de-risk the project before you're heading into production and development?
Oh, there's always a number of them. I mean, the resource estimate was an important one. Flora and fauna, we're well progressed there. We're really confident that the project gets approved within the state system. So the last thing you want is to go to the EPBC Act, which is the federal process, which is effectively what Mark Clark is going through with Mount Gibson. It will get approved. It just takes longer.
Yeah.
Similarly, you don't want to end up with the in the Environmental Protection Act of WA, because that's a Part 4 assessment, that takes time. And so we've had several different opinions, both saying that we're not going to have to require for that approval. So it'll be a works approval and a demers approval, 9 months and 6 months respectively. So I think that's the de-risking step that we need to work through. And then wouldn't mind finding some better quality water. So we've done some close-based mag. We'll be off putting in some miscellaneous licenses to the northwest and northeast of us and try to find some better quality water, because that just drives better cost efficiencies as well. They're the only two things that we really want to work on, to be honest.
So not too much to do before we can hit the ground running, really.
No, and neither of them really drive the pre-fees, but they're the things we need to do as we move towards DFS and then getting into production.
Getting into the serious end of things. Now, finally, what other growth opportunities do you see for Astral heading into the future?
Well, this Maximus tenure gives us a significant additional footprint. So we know we can continue to find circa 1 gram dirt at Mandilla, but it doesn't add value if you've already got 15 years worth of mining and 20 years worth of processing in front of the plant. But Maximus, I mean, it did used to have the Wattle Dam gold mine. It was the highest grade gold mine in Australia. And if I was a great promoter like a Simon Lawson, I'd be talking the bejesus of that up. But we certainly are comfortable that we'll find several 100,000 ounce accumulations at that Maximus tenure, and it will be higher grade, so we can actually put it in. So that'll be our focus between Fazeville and Maximus's tenure, to just generate high grade ounces that we can put into what's going to be an amazing project already, just to make it better, like the icing on the cake.
Marc Ducler of Astra Resources, thank you so much for joining us as always. We love having a chat to you and can't wait to see what news flow you have over the next 12 months.
Cheers, thanks very much.